It's time now for an in-depth look at the global markets, including Korea. And for that, I'm joined on the line by Dr. Hwang Seiwoon, Research Fellow at the Korea Capital Market Institute. Dr. Hwang, thanks for coming on today.
Thanks for having me today.
So, as we just heard, the won has fallen against the dollar to the weakest level in 2 years or more. We're now flirting with 1,200 won to the dollar. What happens if we break that threshold, and do you see a need for the financial authorities to intervene?
Last Friday, the local currency closed at 1,195.5 won to the dollar, marking a 28-month low against the greenback over the trade frictions between the United States and China. Today, the local currency was trading at 1,194 won against the greenback as of 4 p.m., down 1.5 won from the previous session's close. Concerns over excessive rise in the $1 exchange rate are increasing as the local currency approaches the threshold 1,200 won to the dollar. However, there is no need to give too much meaning to the threshold of 1,200 won. We need to pay more attention to the price volatility and speed of price change. Some market participants suggest that South Korean financial authorities need to intervene in the foreign exchange market to stem the decline of the local currency against the U.S. dollar. However, the possibility is still quite limited because the price volatility is within acceptable range so far.
Well, here we saw the Kospi closing dead even today. That's Korea's main stock market. It's taken a beating in recent weeks, still in the 2050 range, and the Kosdaq down just a bit. What was driving the trade today?
South Korean shares traded just a little lower on Monday and gave up earlier gains as investors await the next move in the U.S.-China trade dispute. The benchmark Kospi almost didn't move at all, while Kosdaq Composite lost 1.69%, which is much worse performance than the Kospi. Modest losses on Monday came as financial markets remained on edge over intensifying U.S.-China trade war, with the Trump administration last week adding Huawei technologies to a trade blacklist. Trade negotiations between the United States and China would not have clear conclusion in the near term. Considering the weak local currency and issues over demand and supply in the stock markets, the investors' appetite is not favorable, especially from the foreign investors. Investors need to take more conservative approaches as the stock markets are expected to show more volatile price movements.
Well, let's zoom out for a bit. We have the trade war, of course, between the U.S. and China escalating. It seems like maybe a growing likelihood of an interest rate cut. What should we be watching for the rest of this week?
Here are some notable events coming up this week. The minutes of the FOMC's April 30th, May 1st policy meeting, released Wednesday, may reveal the levels of consensus around Federal Reserve Chairman Jerome Powell's assertion that officials didn't see a strong case for moving interest rates in either direction. On Thursday, on account of the April meeting of the European Central Bank could reveal more about the discussion that saw the review of negative rates inserted into President Mario Draghi's opening statement. Counting of votes from the Indian general election takes place Thursday as Prime Minister Narendra Modi attempts to secure a second term. Most commentators predict the government will be returned, though with a reduced number of seats.
Got it. All right. Thanks, Dr. Hwang. That's where we'll have to leave it today. We appreciate your insights, as always.
Thank you very much.